One of the most complacent markets out there right now is the VIX. We're going to dive into the VIX. I'm going to show you a little bit, give you a little sneak peek of this week in the market, the newsletter, the report that we've rebooted now in its third issue. I'm going to give you a little sneak peek of that and talk about the VIX. When we talk about complacency, what we mean is this particular tool, the fear gauge, the fear barometer right now, seems to be overlooking earnings season, seems to be overlooking the potential for volatility with the May 3 FOMC event right around the corner. It's sitting down near historical low levels, way off the +1 standard deviation of the regional bank financial crisis. And it's something that I think we're going to keep an eye on for the next couple of weeks. We'll dive into VIX Index and VIX Futures. By the way, I'm Raghee Horner, lead trader over at the Simpler Futures Room, and of course, my Sector Secrets Mastery, and the author of This Week in the Market. So if you haven't checked out the reboot of This Week in the Market, we are now into our third issue, and we are looking at data, macro, watch lists, and different things that are going to land on my radar, and I share them with you each and every week on Friday afternoon, so you can read them through the weekend and be ready Monday morning for what is to come. I'm going to walk you through. Actually, I'm right in the members area here, and I'm going to take you through this issue so you can get an idea of what this tool is all about. And I'm going to talk to you about the VIX while we go through it. So first of all, if you've never looked at This Week in the Market, it is a fairly beefy report by design. The whole idea is to give you something where you can, if you want, print it out, although you don't have to. It is very printer friendly, as you can tell. We go into graphs, we go into charts, we cover lots of symbols, a game plan, the different stories of the week. I get into sector rotation, and you can see this all here. This is just this issue, and that's a quick peek at it. Now, what I want to show you all is a deep dive that we did on specifically the VIX. Again, something that I feel right now is very complacent. So on the chart here to the right, this is the VX continuous contract with the daily price movement ranges, the multi-trend, and volume profile here on the right side. We do talk quite a bit about volume in the newsletter as well. Seasonals, volume, data, and here we have an interesting look at a market that's trading down near this 20 to 18 area, which tends to be support. Now, this support level, obviously, is coming off of all of this. This is a +1 standard deviation move. This is considered the panic zone. If you're looking at VIX futures, 28 is pretty firmly the panic zone. If you're looking at the VIX index, which I'll switch on over to right now, you can see that 30 level is what you're looking at. Most people will cite what's happening in the VIX through the VIX, but let me show you why I would recommend you check out the VX futures. Number one, unlike the VIX, we can pull up volume on the VIX futures. I can also pull up the historical volatility, which is the daily price movement range resistance right here, and support as well. And then you can see right along this right here, vertical, we have the volume profile, which is where I look at those volume ledges. Where are those levels like this that are quite literally jutting out from the right side that give price something quite literally to hang on to? Remember, these are the levels that we have already seen the most volume in the VX futures trade at. So this isn't a projection. This is what has happened. These are positions, right? It's commitment. It's whether traders have felt this is an important level or not. Price-based volume is going to give you an unbelievable X-ray vision of the market. The VIX is no exception. That's why I like the futures, by the way. What we want to do is look at the year. I'm going to squeeze in a little bit more data here. And one of the things that I mentioned in the newsletter here is, again, the VIX is often called a fear gauge or fear index, a tool developed by the CBOE, the Chicago Board Options Exchange. It's an implied volatility measuring stick of the S&P 500. Now, here's the thing we want to remember. When the VIX is low, this would include VIX futures, it reflects less concern about price swings and volatility. Well, why on earth would we be sitting down here 2 weeks in front of the FOMC and as we embark on the very early part of earnings season? Well, relative to the banking crisis, this is a quieter environment. But you can see when we get down into this area, and this is just 2023, right? We get down into this area, it does tend to move higher from that area. Now, we can sometimes see exaggerated moves based on the contract rolling over, but you'll see just how important 18 to 20 is for support and why we would call this the complacency level. All right, what could this mean for the broader averages? Well, first of all, I'm going to think about different symbols that are kind of vulnerable right now to potential moves lower. I don't mean cataclysmic moves lower and crashing. I just mean some exhaustion and potentially a pullback. That could include the S&P. That could include the healthcare sector, XLV. That could include financials, which are still pretty vulnerable. Even XLK, right? One of the things that I discussed in this particular issue, aside from gold, aside from VIX, where we did a pretty big deep dive, is one of the corners that I'm particularly concerned about as we go into earnings, and that is consumer discretionary, right? As well as the XLK. I think there's two things at work here. One is inflation, right? Inflation likely is still taking a toll on consumer discretionary. Consumer discretionary is 23% Amazon, about 15.5% Tesla. And by the way, the third heaviest weighted stock in that sector is Home Depot, which is not faring very well, frankly, at the moment at all. Still below the 200 propulsion, 200 exponential moving average. The other corner of the market, and this is going to affect the NASDAQ and the S&P disproportionately, is a fairly healthy looking uptrend in the XLK. The day after the May 3 FOMC, we've got earnings from Apple May 4. So this is still a bit off, but these are things we're thinking about in a bigger picture way. Apple is going to be particularly vulnerable to what seems to be a very odd upgrade cycle reality that we're dealing with right now. Back in 2020, we were all working from home, we were all at home, and we had a lot of tech purchases, right? This is just consumer behavior, gang. So fast forward to 2023, one of the things that we're already seeing shades of is that upgrade cycle, right? After a pretty intense purchase cycle in 2020, kind of stalled out, being pushed out. And we've got to wonder to what degree, especially when it comes to XLK, might we see with Apple some disappointing forward guidance? I mean, these are questions to be asking. These are questions to be asking, just to be prepared for these possibilities. Now, if we do get that, I'm not talking about shorting Apple. I'm talking about being patient and waiting for a potential pullback from these highs. And do I want to wait 2 weeks for that? I don't. But I do want to remember that if we can come on down to this 200, that would be a fantastic place to try to take advantage of movement. So might earnings be the catalyst for that? That'd be fantastic. In the meanwhile, we'll just surf the daily price movement range zone. Something, by the way, we did today in silver. We surfed that daily price movement range zone. So if you want to see what silver did in this zone, we were looking at two levels. One, the volatility level. Two, fantastic volume ledge. If we would have weakened a little bit more, I would have been absolutely open to this volume ledge. You might say, Rog, what am I looking at here? I'm looking at this level right in here. This is what I call a volume ledge. This is a significant amount of volume traded in this area on silver futures, around $25, 25 points. All right, and there's your volatility zone sitting just above it. Love this long position. A great way to do this is with the SLV ETF via calls. All right. So these are some of the things on the radar. And these are some of the things that we are looking at in this week in the market. If you haven't checked it out yet, $7 trial for 1 month. You can find that on the Simpler Trading website. In the meanwhile, enjoy your weekend. And I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, Subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.